Ashish Maheshwari joining us. Good morning, Kunal, once again, and good morning to you, Ashish, as well. Thank you so much for joining us on the show. And this is the part of the show where we take all of your viewer queries. And if you're tuning in for the first time, yes, you can write into us on the numbers that are flashing on the top of the screen. That's our WhatsApp number. You can write into us all of your queries. Due to a paucity of time, we limit one stock per viewer. Do mention your name, the quantity of the stock that you've purchased, the name of the stock that you've purchased, as well as the time horizon that you're looking for, and we'll take your query to our experts and try and get answers to as many as possible for the day. So let me get going with the first query that I have is from Natarajan Ramesh, and he's saying that he's holding 150 shares of Fortis Hospital at a price of around 261 rupees per share since last year. He wants to know whether it's a profitable buy, and he's considering to hold on to it for the next 2 years. Ashish, what's your take on Fortis Hospital? Do you think it's a profitable buy?
See, Fortis Healthcare is slightly underperformer in this particular pack. It has not given the kind of return which were expected even in the COVID time, if you ask me. So my suggestion will be because this stock has stuck up in very narrow range. So, like it's not going to give you a very good returns in shorter term. So my suggestion will be to exit from this stock. Instead of this, I suggest that you look at Max Healthcare, which is again in the same space. Stock has given very good returns in last 1 year, and post correction, because the stock is down by almost 40 rupees from its highs which we have seen recently. Again, accumulation we are witnessing in this stock. Along with this, Max Healthcare has come out with good set of numbers also compared to Fortis. So my suggestion will be to swap your holding from Fortis to Max.
I want my team to pull up 63 Moons technology on the chart, and in fact let's zoom out as much as we possibly can, because a lot of our viewers who've started investing in the last couple of years will not probably know the history of this company. It used to be called something else back in the day. Financial Technologies was the name of the counter. And it's lost a lot of ground, Ashish. We've got a viewer, a senior citizen, Mr. Ghosh, Subrata Ghosh, and he's been holding not for very long, I would think, because he's bought at levels of 196. So a couple of questions for Mr. Ghosh. One, I'm taking the liberty of asking, because he's holding as many as 45 stocks in his portfolio. 63 Moons is one of them. One, what's the view on 63 Moons for the long term on the fundamentals? Would you suggest holding? And would you suggest holding 45 stocks, or is that too many?
There are too many, if you ask me. Like you are running a mutual fund, if you're holding 45 stocks in the portfolio, and again, 45 is still okay, but if you are watching those stocks on regular basis, unnecessarily it increases your blood pressure or it lowers your blood pressure with the market moving up and down, and the kind of volatility we have seen in 2022. So my suggestion will be like to curtail down some of the portfolio stocks and just make it a portfolio of 10 stocks where you can actively keep track of developments in this particular 10 stocks, and just ensure this is also consists of 4 to 5 sectors where which are more promising compared to owning so many stocks as a retail investor. As far as 63 Moons is concerned, stock is very underperformer. In fact, it is down by almost 200 rupees if I see its 52-week high. And for last 2 quarters, company is also incurring losses. So nothing look promising in 63 Moon Technologies. Instead of this, I will recommend another IT stock which can give you good returns, which will be Intellect Design Arena. This is a company where if you will shift from 63 Moon to this stock, I'm expecting another 25% kind of upside is due in Intellect Design Arena in next 3 to 4 months time. So sell 63 Moon.
tempted to ask if that's the wind chime that's playing in the background, but must say it's very soothing, especially when you're tracking the markets. It's kind of...
It's getting me ready for the weekend.
Yeah,
I can almost imagine sitting on a hammock and listen. So I'm guessing Ashish is already getting set for the weekend. We need to ask him if there's a hammock in the background somewhere.
By the way, where are you going? Where are you going to sit?
I'm going home. I'm going home.
There you go. Alex diverged his weekend plans already. But yeah, getting on to the next query. Then this one is from Nayan Gandhi, and Nayan Gandhi is trying to trick me by asking the same question with two different usernames. So Nayan, I will take your query. It's on Deepak nitrate, and he wants to know whether it can be bought at current levels for the next 3 to 5 years. Nayan Gandhi is writing to us from Hyderabad, and along with Nayan, we also have Vishal, who's asking us this query from Dubai on Deepak nitrate itself, and he's saying that he's taken a fresh entry first thing this morning at a price of around 1,976. He wants to know whether it's a good strategy, and he intends to keep this stock for the next 2 to 3 years. So Ashish, one viewer is asking whether it makes sense to enter right now, and one has already entered, so wants to know is the right strategy. We know what's happened with Deepak nitrate. It's very unfortunate with the plant, but on the fundamentals, do you think that this particular incident will change things for the company and right strategy to be in for the longer term?
And I think all the plant and machinery equipments, etc., are insurance covered. So you are going to recover your money there. But only my issue is that this stock has seen continuous liquidation by foreign institutional investors. From 3,000 odd levels, the stock was almost 2,100 levels. And still there's no buying which is emerging because stock has given fantastic returns in last couple of years to investors, and the stock is expensive as far as valuations are concerned. So my suggestion will be not to buy Deepak nitrate at this price point, because even if you buy, there will be some knee-jerk reaction on upside, and again you are going to see some selling again emerging. So my suggestion will be to avoid buying Deepak nitrate at this price point, because again I'm not able to see any big rally which is building up in chemicals and related stocks. So my suggestion is to avoid Deepak nitrate.
We've got a question coming in from Krishna Das. He's writing in from Bengaluru, and he's asking about Nippon Life AMC, Kunal. He's got 400 shares, but I do not know what level. Oh, sorry, he's bought at levels of 440. He's saying he can hold for a couple of years, and he's asking, is this a good point to average, or should he exit his holding?
No, I think I would suggest to hold on. In fact, on the longer term charts from 2020 start, when the stock was at 200 to 210 kind of levels, from there the rally started off to 400 plus, and now the stock is back below the 300 mark. So it's completed a strong retracement point. It's entered into a good support zone at this 275 to 80 mark. So I think if you can look to average, that could be a better strategy. Or if you can't average, then I think at least hold on to your existing holdings on Nippon Asset Management, and I believe possibly if the trend reverses over the next couple of years, you could probably look at the stock recovering quite sharply from current levels.
Okay, this one was also for you, Kunal. This one is from Harish Kumar. He's writing to us from Bangalore, and he wants to know whether he can enter all cargo at current market price. If not, then is there any other logistics sector stock that he can look at? He wants suggestion of two stocks, that is.
So I think Aegis Logistics as well as All Cargo, they both look very attractive. Even Gati is one of the stocks which has done reasonably well for itself. So I think there are very few names which I track from the logistics space. All Cargo, it's just that the last 5-6 days the stock has seen a consistent upside. Today's price action indicates a hammer or doji kind of a pattern, which means possibly over the next 2-3 days you might see the stock cooling off a tad bit from current levels. So buying could be a good strategy, but not at current levels. Possibly wait for the stock to retrace back towards say 330 or 325. That could be a good price where you can look to start nibbling into All Cargo.
There aren't too many, if I'm not mistaken, Kunal, pure logistics companies. Of course, you have Delivery that just got listed, but we obviously don't have enough data on the charts to give you a view on the technicals. But Suvarna's question is next. She's writing in from Pune, and she's asking about NCC. This one's for you, Ashish. She's already holding at levels of, well, I do not know what levels. Or rather, she's saying 70 rupees. She's asking whether she should hold or sell based on the fundamental. What's the view?
If I see fundamental wise, last quarter was pretty good for the company, but the stock is not going anywhere as such because still the confidence is not there among the investors that such theme will play out and for how long it will work. So my suggestion will be instead of NCC, you look at more J. Kumar Infra Projects Limited, which is again a metro projects driven company where they derive almost 60% revenue from metro projects and having a 12,000 crore order book also to be executable in next 3 years time. And we have seen good run up, in fact, in last 1 month also in J. Kumar Infra Projects compared to other infra sector players. So some re-rating is also happening post their last quarterly numbers. So so ideal will be to exit from NCC and shift here.
Right. This next query that I have is from Mukil. He's writing to us from Bangalore as well, and he's saying that he has Redington 1,000 shares purchased at 162 rupees per share. He wants to know whether he can continue to hold on to the stock. The time period is just 6 months. Kunal, Redington, what's the take on this one? Do you think that makes sense to stay put?
See, I would suggest to stay put, not to average at current levels. My sense is that possibly these IT stocks over the next couple of months can see a bounce, but then post that I believe one more round of a correction could be due for these stocks. So I think it's more to do with a time correction rather than the price correction. So price wise these stocks are very attractive, but time correction is possibly these stocks can spend a lot of time, maybe another 3 to 6 months at current zone itself. So if time is not a constraint, then you can look to average, but if you would want to probably time it better, then I would suggest wait out for the next couple of months, at least the next 3 to 6 months. Post that is where I believe that the mid-cap IT stocks would become very attractive yet again.
Okay. We've got a question coming in from Sorish, and he's asking about Indian hotels. This one's also for you, Kunal, and he's asking whether the current market price is a good place to enter the stock, and what, according to you, would be the right time frame to look at in order to get a decent upside on this?
See, so I think it's a very interesting question. Indian hotels is typically a very low beta to slight, moderate beta kind of a stock. Now, for the stock to get into strong periods of uptrend, you would need the market to do pretty well. You would need the mid-cap and the market also to start shaping up extremely strongly. We've seen that correlation with, the mid-cap index for the, for Indian hotels, where Indian hotels tends to do pretty well whenever the mid-cap and the market is extremely buoyant and into a very strong euphoric kind of an uptrend. But other than that, when in periods of downtrend or sluggishness or bounce, we've seen Indian hotel get into a range kind of an action. So purely in terms of beta nature as well as the correlation, I would expect Indian hotels to remain more sideways at current levels of 235 to 40. If you're looking at a buy from a short-term play, then I would suggest why not look at maybe a Chalet Hotel or a Lemon Tree. Both these stocks are very attractive and they're nearing the breakout of a consolidation for themselves. So short-term wise, I would suggest a Chalet as well as Lemon Tree. But if it's slightly to do with longer term, then you can start nibbling at current levels for Indian hotels.
Okay, this next query is from Malta, and I'm very sorry, Malta. Yes, I know I have missed your query for at least 2 days in a row. So let me take this one. Wants to know about Tanla Platforms, Kunal, for the very short term. How does this one look? I'm unsure if Malta has already invested in this one. So if already invested, should one stay put? Or if not invested, then and looking for a fresh buy, do you think makes sense?
So, it's a stock which I do track, quite closely. And, I think looking at the behavior of the stock, it's now shifting into a new range. So the earlier range for Tanla was, I think, 750, 800 as a resistance. Once the stock had broken past about those levels in 2021, then the range got shifted higher. The stock made a high of, I think, 2000 odd levels. And now it's corrected back towards 1200, now at 1450 levels. So the range is shifting higher for Tanla from earlier cap of 750. The range or the support is now at 1200 levels. Since the stock is available at 1400, 1450 levels, I think it's a good zone where you can start nibbling in. I would suggest that you can start at current levels, keep some powder dry, wait out for the stock to get into a further correction, and maybe average out at 1200 again.
All right. Rahul from Pune is asking about the Nifty technical overview on the very short term ahead of the RBI rate decision on the 8th of June, which is next week. I think a lot of economists are building in already a very firm expectation of an increase in the rates. Of course, the last increase was a 40 basis point increase, and that was an off-cycle meeting. Coming to you, Kunal, on the charts, what is the technical suggesting?
So technical setup still indicates that we could be on an uptrend mode at least for the next couple of days. So I've been highlighting this, that possibility that 16,800 to 17,000 is a zone where you need to book out your profits, and that's where I believe that the markets can face a lot of resistance. So today we made a high just on that 16,790, 795 mark on the Nifty spot, which means we're trying to claw back into this resistance point. So possibly over the next couple of days, we may expect a cleaner breakout above 16,800 mark. But I think that's a zone where you can look to book out profits on your longs positions and then stay on the bit of a sidelines once the event gets over and done with.
Okay, this one is coming from Saket Santosh Kumar, and he wants to know whether it's right time to enter Tata Chemicals. He wants an entry price for it, and how's the on the technicals, how is it looking, Kunal?
So it looks quite okay on the charts. Again, a moderate beta kind of a stock. For such stocks, it's a better strategy to wait for the stocks to come back to support levels and then look to buy. Supports for Tata Chemicals is around 900, 920. So you can look to buy, but provided the stock enters into this zone.
All right. Kunal, as well as Ashish, do stay with us. We have to slip into a very short break, and viewers as well. I see a lot of you that have tuned in. Rajeshwari, you have several others. Shravan, all of you just stay with us. We'll take your queries after the break.
Very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do. We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your... Welcome back. You're watching Buy Now, Sell Now. We've got Ashish Maheshwari as well as Kunal Bothra answering all of your questions. And the next one's coming in from Rajeshwari. She's writing in from Chennai. She's asking for a technical view on Himadri specialty chemical, and she's asking whether it can be entered into the current market price for the short term. What are the short term targets? Kunal?
So yeah, I would suggest, I think it's an interesting buy because at current levels of 70, 71 for HSCL, Himadri Specialty Chemicals, I think it's a stock which is inching towards a breakout of a swing pattern. So would suggest a buy. Short term wise, you can look out for 82 as a potential target for the stock, and stop loss for this you can keep it at closer to 64.
Okay, this one I have coming in from a lot of short-term queries all of a sudden. This one is from KJ Singh. He wants a long-term view on Bosch. He's saying that he already purchased some stocks a few years ago at a price of 17,250 rupees per share. He wants to know whether he can also look to average at current price. But what's the long-term prospect looking for this one? What's your take on this one, Ashish? Bosch is a counter.
Yeah, certainly you can average at this price because stock has already corrected quite a bit from 18,000 levels to 14,000 levels. And this is not something that any fundamentals have gone wrong or something. I think if I see even their last two quarter numbers, profit went up by almost 250 crore to 350 crore in Bosch. But as you are aware that FIs are booking a lot of profit into Indian market, so it is primarily selling from their side that has brought Bosch stock prices down by almost 3,000 rupees. So my suggestion will be to add this blue chip stock and use this opportunity to accumulate gradually.
We've got a fundamental question that is being or rather asked by Sunil, who's writing in from Muscat. He's asking about Karnataka Bank versus Karur Vysya Bank. What's the view here, Ashish?
So I prefer more Karnataka Bank compared to Karur Vysya Bank. In my view, the valuation-wise, Karnataka Bank is more attractive. They have raised money as well as the kind of aggression they are showing is much better than Karur Vysya Bank in terms of garnering new business. So go for Karnataka Bank.
Okay, Manoj has a question on Amara Raja batteries. This one is for you, Kunal. He has 125 shares. He's purchased at 800 rupees per share. Should he hold or sell?
I would suggest to sell. It's been a big underperformer. In fact, in the last 2 years, the stock which had topped out at 1,000 odd levels has been consistently falling. Doesn't make sense to hold on to the stock on a longer term basis. In fact, if you get a bounce, say a 10% kind of a bounce from current levels of 500, 550, 560, could be a good point where you can look to exit the stock.
Okay. Kunal, this one's for you. Bobby Jacob is asking about Apollo Hospitals, and this is clearly a stock that hasn't had a very good time of it. He's bought, I believe, 2 months back, and he's asking what the future is.
So short-term wise, of course, it looks that the trend is quite painful on the downside for Apollo Hospital. But then when I look at the indicators, there has been some sort of a divergence which has been creeping up in the last 3-4 days. So even though the stock has been falling from, I think 4,000 levels was the high the stock had made 3 days back, and now it's at almost 3,500, 600. So even if the prices are correcting, the indicators are not falling as sharply, which means somehow the stock is getting into a zone where you might see a bounce back pretty soon for Apollo Hospital. But then of course, looking at the last 3-4 months of chart patterns, it's a stock which is confirmed a downtrend on the monthly time scale. So you can look out for a bounce maybe till 4,000, 4,200, but that could be a point where you can look to exit.
Kunal, Rancho has a query on Infosys, a 1540 call option at 45. He wants to know whether he can look to buy.
I will, suggest a yes, and I think it's a good buy at current levels because the IT stocks, large caps and mid caps, are into a process of a decent bounce. So I think Infosys could be one of the better bets. If you want to add on, maybe look out for even HCL Tech. I think even that stock is due for a decent bounce, at least a 5 to 7% from current levels.
Okay, Ashish, Shubham Khatri is asking about which sectors are value buys at the current market price, and also specifically your view on Adani Wilmar and Adani Green Energy.
Sure. In my view, 2-3 sectors where you can look at entering now. First is I like is a mid-cap IT space. In my view, the route which we have seen in Nasdaq and Dow is almost at the bottom now, and it's a good time because the fundamentals have not shaken at all. Only thing is as there are more seller, less buyer, so stocks have corrected quite a bit. So it's a good time to enter into mid-cap IT stocks. Other than this, I find very good value now is still in automobile sector, and this will also do well. And third is, which I like, is cement. In my view, these companies will also do well. As what was the other question?
Adani Wilmar and Adani Green Energy.
Okay, so these are slightly on very highly volatile stock. One day they are on upper freeze, and second day they come down because they are into higher ASM, GSM scheme of exchanges. So a lot of volatility is there, but in my view, you can continue to remain invested as far as Adani Wilmar is concerned because the way things are moving in food sector, Adani Wilmar and Ruchi Soya, both are front runner of good benefit which they will reap out of higher commodity prices. Adani Green Energy is a slightly underperformer, and in my view, you can exit from this stock.
Okay, this one is coming from Indumati, and she wants a view on sugar stocks for the short term or till 1 year. What has changed after the recent news on export cap, and is fresh buying advised? Ashish, I'll take this question to you. No doubt it's for the shorter term, but what has changed for the sugar space, and do you think that it still makes sense to look at it?
Yes, as far as sugar ban, the export ban is concerned, I think this was need of an hour because the way commodity prices were going up in domestic market also, it make more sense to feed your local market compared to getting higher realization from export. So from government side, it is quite a good move. As far as companies are concerned, in my view, though they might not export that much, but still you are getting very good yield as far as even the domestic prices are concerned, where you are getting even 35 to 38 rupees kind of yield now in sugar. Another thing is the ethanol story is again playing a role. So my suggestion will be to remain invested in sugar sector. It looks quite promising, and here my best bet will be Sri Renuka Sugar.
We've got Manoj who's writing in from Tuticorin in Tamil Nadu, which I believe now is called Toothukudi. We've got a question, Ashish, on Chambal fertilizer. He's bought at levels of 516 and he's losing ground, he says. Should he exit? Should he average at the current price? What should he do?
No, my suggestion will be to exit. In fact, if you have seen, you might have seen in last 1.5 months, all fertilizer stocks have taken big beating again because the raw material prices are skyrocketing for these companies. So margins are going to be affected. So my suggestion will be to exit from Chambal fertilizer at this price point. And for fertilizer sector also, I'm not advising any stock to enter.
Sunita Rai wants to know what's the best level to enter Infosys. Kunal, is the answer right now or is there another level?
No, I think current levels are good levels where you can look to buy. Again, as I said, the time horizon matters over here. If you're looking at it from a very short-term play, then I believe another 50 rupees to 60 rupees could be in the offing for the stock, which should be a decent 4% for a stock like Infosys. So probably closer to 1600, 1620 is where I believe that the stock should get into a resistance mode.
Okay. Kunal, Nifty bank view for the next weekly expiry, very short term. What's the view?
I would expect 36,000 to be crossed for the Nifty bank. That's also one of the double top resistance for the banking index. So today's high, and I think last week's high for 36,000 remains to be a crucial resistance. That should be taken out hopefully next week.
All right, and with that, let's kickstart with our rapid fire. And the first one that I have is from Indrajit Sinha. Adani Power or Suzlon Energy, which is the best one to look at, Kunal?
None of them.
Okay, Ashish, Yes Bank, Haridas is bought, I do not know at what level. He's holding 500 shares, but he's asking whether he can hold for the long term.
Yeah, long term you can continue to remain invested, but expect 5-7% kind of return, which you might get in your fixed deposit, which you can place with Yes Bank.
Okay, Puneet Nanda as well as Jai Krishnan have a query on Balaji Mines. Jai Krishnan has purchased at 3,385. Wants to know what should he do, sell, average or shift to some other sector. And Puneet wants to know how does Balaji Mines look like. What's your take, Ashish?
Yeah, my suggestion will be to remain invested. Like there are news of IPO of their group company also, which will unlock value in Balaji Mines. So makes sense to remain invested here.
Okay. Tina is asking about HDFC Bank. Would you suggest adding in blocks of 10 shares over the course of the next few weeks, or would you suggest another bank? This is for you, Ashish.
I suggest to go with Axis Bank instead of HDFC Bank.
Okay, Arun Krishnan wants a view on IRCTC, already purchased at 850 rupees per share. It has posted good results. He's saying why the share price is not rising, but what should he do with discount, Ashish?
In my view, sale. IRCTC is a stock where a lot of retail investors have got trapped for a long time. So at every rise, there is some amount of selling coming. So better to exit.
Ashish Shravan from Hyderabad is asking about Vatek Wabag. He sees several orders that have been placed with the company. He's asking on the fundamentals, can it be bought?
Fundamentals are good. Only thing is stock is not moving. So my suggestion will be to wait for some time before we see at least some rally in the stock.
All right, and lastly, Kader wants to know Aurobindo Pharma, is it a buy or no? Kunal, what's your take?
I would suggest an avoid, not to buy the stock at current levels.
Okay, thank you so much, gentlemen, for taking the time. Appreciate it. And thank you all viewers for tuning in. Hope we answered as many questions as we possibly could and you've benefited from it. I believe we have live conversation. Oh, okay. So I believe we have to slip into a very quick break. We'll be back on the other side with more, so do stay tuned.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m.